Good evening, viewers, and welcome to today's special report on the Iraqi dinar, where a shocking announcement from the Central Bank of Iraq has left thousands of investors questioning the future of their holdings. Just yesterday, the bank issued a statement that immediately froze the current exchange rate, leaving many who have patiently waited for years for a potential revaluation to wonder if their dreams of financial gain have just turned into disappointment. The reaction across investor communities has been swift and emotional, with some selling in panic, some choosing to wait, and others seeing this development as a long-term positive for Iraq's economic stability. In this report, we'll break down exactly what the rate freeze means, why it was implemented, and how it could shape both the short-term and long-term outlook for Iraqi dinar investments. Whether you are a seasoned investor or just following this story, it's crucial to understand the reasoning behind the bank's decision and the implications it could have on your financial strategies. The Central Bank of Iraq, commonly known as the CBI, made it clear that the current exchange rate of approximately 320 dinars per US dollar will remain frozen indefinitely. For investors who have been monitoring speculation about a possible revaluation, this news came as a total surprise. The freeze appears to be part of a broader economic stabilization strategy aimed at reducing currency volatility in a period of global uncertainty. This sudden move has sparked intense discussions across forums, social media groups, and investor networks, with people trying to interpret what it truly means. Some analysts point out that rate freezes are often implemented when countries face economic pressures or political uncertainties, suggesting that Iraq may be prioritizing financial stability over immediate currency gains. For investors, this shift in policy means that expectations for a near-term revaluation must be adjusted, and patience may be required as the country navigates complex economic challenges. Investor reactions to the freeze can generally be divided into three main categories, reflecting different strategies and risk tolerances. First, there are the panic sellers, those who interpreted the freeze as a definitive signal that the long-awaited revaluation is no longer coming. These investors are selling their holdings immediately, often at minimal gains or losses, seeking to move their money into alternative investments that they perceive as safer or more liquid. One investor reportedly sold millions of dinars within hours of the announcement, citing a belief that a frozen rate signals an indefinite delay of any revaluation. This group, which represents a significant portion of the initial market reaction, is motivated primarily by fear, uncertainty, and a desire to protect capital in the short term. Their actions illustrate how emotionally charged investment decisions can become when major central bank policies change abruptly. The second group of investors can be described as the wait-and-see participants. Unlike panic sellers, these individuals are choosing to hold their dinars while carefully monitoring the situation. They recognize that central banks sometimes implement freezes as precursors to larger economic adjustments, such as structured revaluations or currency reforms. For these investors, the freeze is not necessarily a negative event, but rather a strategic pause that may ultimately benefit those willing to remain patient. By maintaining their positions, they are betting on the possibility that economic stability and policy planning could lead to a more sustainable and meaningful increase in the dinar's value over time. This approach requires discipline, research, and a willingness to accept uncertainty, which can be difficult for those who are used to more immediate financial outcomes. A third, smaller but notable group of investors is embracing the freeze as a positive development. These renewed optimists view the decision as a sign that Iraq is taking serious steps toward long-term economic stability. From their perspective, freezing the exchange rate eliminates speculative volatility, allowing the country to strengthen its monetary policy foundation before any significant currency adjustments occur. By fostering predictability, this policy may attract foreign investment, support business confidence, and ultimately create a more stable economic environment in which a revaluation would be more credible and sustainable. Investors in this group are often adding to their dinar holdings, seeing the freeze not as a setback, but as a preparatory step that could lead to meaningful gains in the future, albeit on a longer timeline than many originally anticipated. In addition to these investor groups, there are those who speculate about broader, strategic implications of the freeze, including potential coordination with international financial institutions. Some theories suggest that Iraq is aligning its currency policy with global economic pressures or complying with advisory guidance from organizations such as the International Monetary Fund. While these claims are often speculative, they highlight the complex interplay between domestic economic management and global financial systems. Analysts note that countries under international economic scrutiny often adopt policies like rate freezes to demonstrate fiscal discipline and control over currency stability. Whether or not these claims are accurate, they underline the importance of considering macroeconomic, geopolitical, and institutional factors when evaluating the future prospects of the dinar. Financial experts emphasize that currency freezes are not necessarily permanent obstacles to revaluation. Historical examples from other nations demonstrate that freezes can last from several months to multiple years, after which gradual appreciation may occur. For instance, Kuwait froze its currency rate in 2008 during the global financial crisis and maintained that freeze for over a year, eventually allowing a controlled increase in value. Similarly, other countries have used freezes to stabilize markets before implementing measured adjustments. In Iraq's case, experts predict that the current freeze may last anywhere from 6 months to 2 years, depending on internal and external economic conditions. Understanding these patterns helps investors set realistic expectations and develop strategies that account for extended holding periods rather than immediate gains. One of the key factors influencing Iraq's decision to freeze the rate is the country's reliance on oil revenues. Oil prices have historically played a major role in shaping the Iraqi economy, and fluctuations in global oil markets create instability that can affect currency values. By maintaining a fixed exchange rate during periods of volatility, the CBI aims to protect the dinar from sudden devaluation, providing more predictable financial conditions for businesses and citizens alike. However, while stability benefits domestic planning, it can also impact competitiveness. If regional currencies fluctuate while Iraq's remains fixed, exports may become relatively more expensive, potentially affecting trade balances. Investors must consider these economic dynamics when assessing the implications of the freeze for long-term returns. Political stability is another major factor in this decision. Iraq has faced ongoing internal conflicts and governance challenges, making it risky to implement significant monetary changes without clear political backing. A sudden revaluation under unstable conditions could lead to unintended economic consequences, including inflationary pressures or market panic. The freeze allows policymakers to maintain control over currency movements while addressing internal political issues. Investors who recognize the link between political stability and monetary policy are better positioned to anticipate potential changes and respond strategically. In this, the freeze is not necessarily a negative event, but rather a reflection of the realities that the country must manage to ensure sustainable economic growth. Investor psychology has played a crucial role in the response to the CBI announcement. The emotional impact of delayed revaluation has been widely felt, with many long-term holders experiencing frustration, disappointment, and even anxiety. Support forums and online communities have been filled with personal stories, strategies, and debates about whether to hold or sell. While these reactions are understandable, experts caution that decisions based purely on emotion often result in suboptimal outcomes. Investors who remain calm and rational, assessing their risk tolerance and diversification strategies, are more likely to navigate this period successfully. Recognizing the psychological effects of such news can be as important as understanding the economic fundamentals themselves. For new investors considering entering the Iraqi dinar market, the rate freeze fundamentally changes the risk-reward equation. Previously, some speculators may have hoped for rapid gains through a near-term revaluation. With the freeze in place, those expectations must be adjusted. The potential for quick profits have been effectively removed, making dinar investment a longer-term proposition that requires patience, research, and a tolerance for uncertainty. Investors need to weigh the opportunity cost carefully, comparing potential returns with other available options in the financial markets. In this environment, the focus shifts from short-term speculation to long-term strategic planning, where timing and market stability play critical roles in shaping eventual outcomes. From an economic perspective, the freeze provides benefits beyond individual investor strategies. Stable currency rates can improve business confidence and encourage foreign investment, creating a more predictable environment for companies operating in Iraq. Investors and companies can plan their budgets, contracts, and long-term projects with less concern about sudden currency fluctuations. This stability can have a cascading effect on the broader economy, fostering growth in sectors beyond oil, including retail, construction, and services. However, stability is a double-edged sword. While it reduces volatility, it may limit the flexibility of policymakers to respond quickly to external shocks. Understanding these trade-offs is essential for anyone tracking the Iraqi dinar and its potential future value. Experts have also highlighted the role of international pressures in the bank's decision. Iraq has been under scrutiny from global financial institutions to maintain fiscal discipline and stabilize its currency. A freeze may be interpreted as compliance with international recommendations, signaling a commitment to prudent economic management. Countries facing similar pressures have often found that such measures help build confidence among global investors, creating a foundation for eventual currency strengthening. While the freeze may delay immediate revaluation, it could contribute to a more controlled and credible adjustment when conditions allow. Investors must recognize that the decision is not solely about domestic concerns, but also about how Iraq interacts with the global financial system. Oil price fluctuations, regional conflicts, and political uncertainty will continue to shape the trajectory of Iraq's monetary policy. Any significant changes in areas could influence the duration of the freeze or the timing of a potential revaluation. For instance, sustained higher oil prices may give policymakers confidence to allow gradual currency adjustments, while continued regional instability could prolong the freeze indefinitely. Monitoring these macroeconomic indicators is essential for investors who want to make informed decisions. Staying updated on both domestic and international developments provides a more accurate picture of potential risks and opportunities, allowing investors to adjust strategies as conditions evolve. It is important to remember that diversification remains a critical principle in investing, particularly in volatile or speculative markets like foreign currency. Holding a portion of your portfolio in dinars while maintaining other investments in stocks, bonds, or real estate can reduce overall risk. Those who are financially prepared to handle uncertainty are better positioned to weather the emotional and economic impact of policy changes like the CBI freeze. Conversely, investors who place disproportionate reliance on a single currency or asset may face significant setbacks if expectations are not met. Sound investment strategy involves balancing potential gains with the likelihood of delays, freezes, or other unpredictable events. Looking ahead, the key question for investors is whether this rate freeze signals the end of the revaluation or simply a temporary delay. While no one can predict with certainty, historical trends suggest that freezes are not permanent blocks to appreciation. Past examples in other countries indicate that once conditions stabilize, currencies may begin a gradual increase in value. Patience, ongoing research, and careful monitoring of macroeconomic conditions will be critical for those holding dinars. Understanding that timelines have likely shifted is essential for avoiding panic-driven decisions and maintaining a disciplined investment approach. For those holding dinars today, a practical approach involves evaluating financial capacity, risk tolerance, and investment goals. Can you afford to keep your money tied up for potentially several more years? Has your original rationale for investing in dinars changed based on recent developments? Considering these questions helps investors make informed decisions rather than reacting emotionally. Reviewing alternative investment opportunities is also important. Some investors may decide to sell a portion of their holdings while retaining exposure to benefit from potential long-term gains. Whatever approach is taken, clarity, discipline, and analysis must guide each decision. In conclusion, the Central Bank of Iraq's decision to freeze the exchange rate has created a mix of concern, caution, and cautious optimism among investors. While short-term expectations for revaluation may be dampened, the move is part of a broader economic stabilization strategy that could support more sustainable growth in the long term. Investors should adjust their expectations, understand the factors driving policy decisions, and prioritize diversified, well-researched strategies. The future of the Iraqi dinar remains uncertain, but by staying informed and patient, investors can navigate these developments with clarity and confidence. This is a pivotal moment for the dinar market, and understanding the full context is essential for anyone considering holding, buying, or selling in the coming months and years.